Hey everybody, welcome to Trading Capital's exclusive analysis. This is just a quick emergency update before we head into some of the big earnings tomorrow. The bulk of the S&P 500 is reporting earnings, but just in the after hours, we got FRC Bank reported earnings. They did a double beat on the earnings and the revenue. However, that was pretty much thrown out of the expectations were thrown out pretty sharply. So realistically, that's why the stock is down substantially. Now, today FRC had a pretty impressive move. You can see this breakout, beautiful follow through move up, finishing up on the session 12.2%. And then when you look in the after hours off that earnings report, boom, it got demolished. All of those people that bought in over the last few days, 4 days, buying a potential breakout, bottom picking this regional FRC bank, have been slaughtered. Absolutely slaughtered. We're talking about a 12.2% move up and over 21% down. That is not healthy for the regionals. Now, with this type of weakness in this particular regional bank, it's naturally going to have contagion on the regionals. And one thing I've informed my members here is basically what I'm observing in the regionals is this is a descending triangle. This is a bearish pattern, and the probabilities dictate a move much lower. And one of the reasons why I'm thinking there's going to be a bigger move lower is if you look what transpired here. You tried breaking out, and that breakout was failed, and you were met with more 3 additional days of selling, closing you back inside of the descending triangle pattern. Since you failed to break out here, the probabilities dictate that you should have a move down to the low end of the range. Now, considering we've been consolidating, and if you look on the weekly chart, we've now been consolidating for 1, 2, 3, 4, 5, 6, 7 weeks of consolidation. That is enough consolidation on the weekly chart to actually start piercing and making new lows in this trend. But again, if the regional banks start to become under pressure, that's going to put significant amounts of pressure on the Russell, the IWM, the small caps, the 2,000 stocks that are really the true barometer of the overall economy. Now, let's just take a look at some of the earnings and discuss some of the earnings plays. So tomorrow we have in the morning Verizon, UPS, Halliburton, GM, McDonald's, GE, 3M, Pepsi, Spotify. I mean, if we look at some of these stocks like McDonald's just into the stratosphere, not pulling back, the expectations for these earnings are to come in extremely well. If for some reason McDonald's doesn't come in line with what the market is expecting, and by this type of price action, it is priced in that McDonald's is going to have a stellar earnings report. But if they miss somewhat slightly, I think that this stock is going to see a pullback. And one of the common themes that we could be expecting in this earnings report, we already saw a brief glimpse today. If you look at who reported, Coke, KO. Take a look at that. Good earnings report, and it was that same old buy the rumor, sell the news. Huge pop-up, met with a massive reversal on volume. That might be the common theme in this overall earnings report as we see these gap ups on good earnings, and then the sellers just emerge and reverse the price back lower. Even if we look at Spotify, that's had a tremendous run, slowly starting to look like to run out of momentum. Let's take a look at 3M. That stock has also been under pressure lately and is in a technical downtrend, but trying to form a little bit of a base off of the lows. Let's take a look at UPS. So that's going to be a huge component for the transport index. Right now it is in a technical uptrend. You can arguably say you have broken out of this beautiful weekly inverse head and shoulders as seen by this left shoulder, a head, and a right shoulder. But with earnings, anything could happen. Any pattern can fail, and any pattern can reverse, or any pattern can continue. So really it's kind of risky hopping in when this stock has had such a terrific run at this point in time. But I'm going to urge you to be cautious with this earnings period, because if a stock does report good earnings and it gaps up, don't be the person to chase. That is often where you get slaughtered, just like the people who chased Coca-Cola higher thinking it's going to break out of this double top, triple top zone over here, and it was met by so much selling. And then obviously the big ones after the bell, Microsoft and Apple. Microsoft's interesting because that actually got beaten up today. It definitely had a lot of relative weakness in comparison to the QQQ, just barely down on the session. But Microsoft actually finished down today minus 1.4% on a heavy volume sell-off. So that's a little bit of an interesting red flag for Microsoft, considering the stock is kind of running out of steam, looking tired, it does look like it wants to move down to the 50-day moving average, maybe even this upsloping wedge pattern that I have priced in for Microsoft. But the fact that Microsoft is selling into earnings leaves a little bit more wiggle room for the stock to not take that much of a sell-off if the earnings come in worse than expected. But I remember the last earnings period was pretty wild on Microsoft. What happened in the last earnings period on Microsoft down here is you had a big gap down. I remember basically covering our short, and then you had a huge reversal, which is what led Microsoft on this epic rally. So definitely pay attention to Microsoft because it does hold such a behemoth weighting in the overall indices. And then if you look at Google's also looking somewhat top heavy, but believe it or not, out of the mega caps, it is looking out of the ones to maybe consolidate and move a little bit higher. I have it priced in that Google actually has to hit this 112 level before we hit major resistance. So maybe Google gets a gap up, but I will be looking to fade it if it gets a gap up. I have no position in Google, but definitely pay attention to that. We also have Enphase after the bell, Visa, Chipotle, Texas Instruments, Juniper, Stride, BOYD. So tons and tons of companies reporting. But again, don't chase. Let the price action consolidate. Find the right pattern setup. And again, based off of what I'm seeing in the after hours with this regional bank, that is not a healthy sign for it to be down, trading over 21% down after a terrific move up. So imagine if you were one of these people that bought in here on a heavy volume breakout, thinking you were off to the races, the stock is so oversold, it's going to gap fill 1, it's going to gap fill 2, it's going to gap fill 3, and then you just get slaughtered. So this is the type of market we are in. If you chase, the market makers are going to make you pay for it. Now, for all my natural gas bulls, today was a phenomenal day for natural gas. Let me just erase all of these trend lines so we can start fresh from this point in time. Obviously, natural gas is consolidating now above the 7-day moving average in yellow and above the 20. That is a short-term positive sign. And we're on the near-term cusp of seeing the 7-day moving average intersect with the 50-day moving average. Every time you have that, you likely see much more upside in the near term. And once we clear this red bar high, I think we could see a double-digit jump in natural gas. Just how oversold and how much of an accumulation process is occurring at this beautiful rounding basing formation for natural gas. I think we're very close to seeing a big move to the upside. I still think at the minimum we have to retrace back to this gap fill. And again, just remember, be patient with nat gas because this is a weekly bottoming tail reversal and also a monthly bottoming tail reversal. So definitely pay attention to that aspect of the market. There's a lot of interesting dynamics that are transposing in this market right now. I think tech is definitely seeing some weakness, but there's obviously some long trades that may provide some alpha opportunities in the near term. So definitely pay attention to that. Another stock that is tied to natural gas I'll give you is AR. Full disclosure, I am long AR with my members, but needless to say, look at this beautiful bullish engulfing candle on the daily. AR had a hard sell-off, making a new nominal low, and then reversed off of that level. Another interesting natural gas play is EQT. I hold no position in this, but EQT is putting in some bullish consolidation, some structure. You have a hard reversal candle over here to get through, but needless to say, you are holding the 20 and the 50-day moving average. As long as you hold above that, you have a shot to consolidate and actually move higher on EQT. So these companies do hold some pretty direct heavy correlations to natural gas. And one of the things that we could be watching for on EQT is this potential breakout. You have this kind of this rounding formation here, left shoulder, ahead. You would need to come a little bit lower on EQT to form a right shoulder, but needless to say, it doesn't have to come down pretty deep. I mean, even from here, if you were to surge higher and break out of this, this is a valid inverse head and shoulders, and the pattern would take you much higher, likely to the 200 daily moving average. All right, let's run through the quick SPX, shall we, for some of those S&P market participants. One of the things I'm looking at on the SPX is this orange moving average. It is the 1-year moving average, 365 days of data on the S&P. What is that 365 days of data telling us? It is sloping down. We are in a downtrend. This bear market is not over, despite many mainstream market participants saying that we're out of this bear market. Look at the moving average. If this moving average was sloping up and we were consolidating above it, I would likely say yes, we're actually reestablishing an uptrend and we're moving past the longer term 1-year trend, bear market trend. But as of now, we're still stuck underneath the SPX 365-day moving average, and the markets are looking a little bit tired and exhausted. So I think we're very close to a bigger directional move. Obviously, with earnings coming up, it's going to be telling to see where that directional trend heads. I think there's interesting long plays. I think there's interesting short plays on our horizon. And I definitely encourage you to just be patient with your setups, because there's going to be lots of volatility as we progress through the rest of these earnings plays. On that note, thank you all for tuning in. Please give this video a big like down below. And if you've liked it, subscribe, and definitely check out our website at tradingcapital.ca, where we give a whole host of valuable information, daily, weekly analysis to our members, and we try to always position ourselves to be on the right side of the market, whether we're going up or whether we're going down. It really doesn't matter to us at this point in time. Thank you all, take care, and we'll see you tomorrow for a wild earnings play. There's going to be lots of gap ups, gap downs. So for you day traders out there, this is hunting season.